We've all heard that old saying, there's no such thing as a free lunch. But what if that's not just about a meal? What if that is like the fundamental rule for anything in life that's actually worth having? Today, we're going to pull back the curtain and look at the hidden price tags attached to some of the biggest successes and find out what it really costs to win. This quote from Jeff Immelt, the former CEO of GE, just hits the nail on the head. From the outside, looking in, success looks so easy, almost effortless. But as Immelt and GE found out the hard way, what you don't see is the immense and often brutal price that was paid to get there. And it's a price that can stay hidden for a really, really long time. I mean, for decades, GE was the gold standard. In 2004, it was literally the largest company on the planet. But by 2018, a total collapse. The whole illusion of perfection just shattered. That price they paid for years of seeming stability turned out to be this massive hidden risk. It's the perfect example of our core idea. Success always has a price. Sometimes the bill just comes late. So what is this invisible price tag really? If we want to build wealth, if we want to succeed in the market, we have to understand what it truly costs. Okay, so forget about dollars and cents for a minute. The real price of investing is paid in a totally different currency. Emotion. Yeah. It's that knot in your stomach when you see the market dropping. It's the fear, the doubt, the uncertainty, the regret, all of it screaming at you to sell at the worst possible moment. That is the price of admission. And here's the thing. Just like with luxury goods, the bigger the prize, the higher the price. The potential for those huge, life-changing returns, it demands that you endure some truly uncomfortable, gut-wrenching feelings. Let me show you what I mean, because I've got a couple of jaw-dropping examples for you. Alright, let's take Netflix. Between 2002 and 2018, its stock returned, get this, 35,000%. I mean, that's life-changing money. Looking back now, just let that sink in for a second. For almost the entire journey, you were technically down from a recent peak. Can you imagine the mental fortitude, the sheer willpower it takes to not sell? That is a heavy, heavy price. And if you think that was wild, check out Monster Beverage. The return it's almost unbelievable. Over 319,000%. But by now, you know the drill, right? What was that hidden price tag for this incredible game? Well, it's the same story, only even more intense. For 95% of the time, an investor in Monster was looking at a loss from its previous peak. This is the point in big, flashing neon lights. Exceptional returns demand exceptional emotional endurance. The market will make you pay the price of uncertainty. So, knowing there's a price, what happens when we try to sneak out without paying? What happens when we try to get the return, but skip all that nasty volatility? Here's a really good way to think about it. Trying to get market returns while dodging all the volatility, it's basically like shoplifting. You're trying to get the goods without paying for them. We all know that if you steal a car, there are going to be consequences. Yet in investing, so many people try to time the market, thinking they can outsmart the system and get away without paying the price. And the evidence shows that trying to cheat the market like this, well, it doesn't just fail. It often ends up costing you even more than if you had just paid the price up front. So Morningstar actually looked into this. They studied 112 of these so-called tactical funds, the ones designed specifically to try and avoid volatility. And the results? Nearly all of them failed. They delivered worse risk-adjusted returns than a super simple portfolio of just 60% stocks and 40% bonds. By trying to dodge the price, they ended up with a much worse deal. And this brings us right back around to GE. The company became famous for massaging its earnings, creating this illusion of perfect, stable growth. For years, they basically shielded their shareholders from the price of uncertainty. But here's the thing. You can't cheat the system forever. Eventually, the bill came due. And when it did, the cost was just catastrophic. So what's the answer? How do we actually learn to endure this price? Well, it all comes down to a really simple but incredibly powerful shift in your mindset. When the market drops, do you see it as a fine or a fee? Think about it. A fine is a punishment, right? It's for doing something wrong. It feels unexpected and totally unfair. But a fee is just the cost of admission. It's the price you willingly and knowingly pay for something you want. And that's exactly what market volatility is. It's not a penalty, it's the price of admission for the chance at long-term growth. Think of it like this. When you pay $100 for a ticket to Disneyland, you don't feel punished. You're not mad about it. You know it's the admission fee for a day of fun and magic, and you pay it happily. Market volatility is exactly the same. It's the fee you pay for the magic of long-term compounding returns. If you see it as a fine, you're going to panic and leave the park before you ever get to enjoy the rides. Okay, let's bring it all home. How do we actually put this new mindset into practice and start willingly, maybe even happily, paying that admission fee? So let's just recap the big ideas here. First, success always has a price. Second, in the world of investing, that price is paid with volatility and fear, not with dollars. Third, trying to cheat that price, it's almost always going to cost you more in the long run. And the most important takeaway of all, start seeing market downturns as the fee you pay for the privilege of long-term growth, not as a fine for doing something wrong. So, I'll just leave you with this question. The price is the potential for incredible long-term returns. The price tag is the volatility, the fear, and all the uncertainty that comes with it. Now that you understand the transaction, the real question is, are you willing to pay the admission fee?